Good morning, all, afternoon, or evening, depending where you are in the world. Say hi in the chat box, especially if you're new or a guest, and let us know where you're from, trading experience, investing experience, etc. Anybody noticed anything in the news, anything happening in the last few days that might be causing a little consternation? Mr. Trump, where's he gone? Yep, causing a little bit of chaos is old Donald Trump. And Minda, from Holland. Sorry, Minda, I always thought you were from Germany. Asad from Manchester. Hello, Asad. Are you the Asad I was talking to last week? And who else? Some more just come in as we get started. Let's wait for everybody to start to get in. Whose portfolio is currently suffering at the moment with Mr. Trump? And is anybody here coming up for retirement and starting to be a bit worried? And if you are, I would suggest if you're following the normal rules, you should be. But I'm going to share with you some ideas today of thinking a little bit differently and thinking ahead of the herd. And we're going to cover that in a moment. Right, I think everybody that's coming is in now. And right, so yesterday in Forex Mentor Pro, I posted a Black Swan event. Welcome to hell. Everybody's panicking. It's the end of the world. Trump's going to destroy the financial system, etc., etc. And as I explained in the post, I've been here before lots of times, and you'll be surprised you've been here quite a lot as well and not realized it. And every time it's the same, and every time it's the emotional aspect of this. This is terrifying. It's going to be the end of the world. Sell, sell, sell. And this is when a lot of people lose a lot of money. But you could, had you planned better for this, avoided a lot of the pain, is the point I'm going to make today. And I'm going to show you ways that for next time you can try to, at the very least, lessen the impact. I started investing in something completely new on the 10th of March, which you would think would be the worst time to get involved. And yet my portfolio is up today, and I am going to show you real life proof of that as well. So again, thinking a little bit differently, using the skills that you learn with us here from a trading point of view, as well as investing as well as. And if you're new, if you go to the home page and you scroll down the page, you will see all of the blogs. So there's my Forex blog here, and then there's also my investing corner here. So I do have a separate website where I go into things in more detail with folks and tell them what I'm buying, when, where, but I have shared a heck of a lot with you guys as well as. So all of that you can find in here if you scroll back. So go back and have a look. So the world is going to end. Trump, everybody is insane. This is terrible. Lots of stressed out traders looking as though the world is going to end. And for some financially, it will do. China, to be expected, are fighting back. And this is Financial Times. Things could get worse. So they could get worse. I showed you the other week in 2007 and 2008. Everybody talks about buying the dip, but the dips were soon surpassed by yet another drop. Let me turn the camera off because it's annoying me and it must be annoying the rest of you. I think I can turn it off without. Hopefully now you just got the screen. So yes, it could get worse, and that is an issue. And then you have the thing I showed you last week. So this is Jamie Dimon's mob. JP Morgan say if you just stay in and you grit and bear it and grit your teeth, you'll be okay over time. And as I pointed out last week, this was timed from January 2003. And I'll show you in a minute why they chose that date and why they chose actually probably to the end of December 2022 as well as. But the market, the Wall Street message mantra simply is always you just hang on in there, you put money in stocks every month, you'll accumulate a decent balance, and in 40 years time, if you don't take anything out on the way and you reinvest your dividends, they make a lot of money. Oh no, sorry, you make a lot of money, and then you will be able to retire and have a wonderful retirement. I disagree completely, and the more this nonsense goes on, the more I think is the case. And here we're talking in 2022, there was the start potentially of a crash. And I was saying to folks here, Mentor Pro, some perspective, and then crypto and stocks and metals. And so I was going through it here, and I was talking in this one about Amazon. You know, all these marketers, Porter Stansfield, these big news sheets in America that charge $2,500 for a news sheet and then upsell you on lots of other things. All of them say if you just invested in the Amazon IPO in 1997, when it was, I think it was $50 at the IPO, you would be a squillionaire by now. But they forget to mention that in 2003, I think it was, it dropped 95%. It actually dropped worse than Bitcoin. I think Bitcoin's worst one was not that bad. So the amount of people who stuck through that period from the beginning is a very tiny group. And Amazon, like all stocks, have gone through periods when they've had significant drawdowns over time. And again, it takes some stomach to stay in there. But the mantra is just keep going. You'll all be all right in the end. And of course, the hedge funds, they're now all using Trump as the excuse for why they're doing so badly. The British government are now blaming Trump as to why they're doing so badly. And yet the hedge funds will still charge you money, even though they lose you money this year. But they'll say, hey, it wasn't my fault. It was Trump. And then, so this is a conventional, I just put in here, buy dividend stocks. I'm not going to pick out a particular person or company about just buy stocks and hold on. And the point of this really, I subscribe to various people on news sheets and Substack for different opinions. And there's a chap on there and he's got a 200,000 portfolio of stocks now. And he says he's doing great because now his $200,000 account is paying him $550 a month. Well, hang on a minute. If you manage to then grow your portfolio to $1 million in the next 20 years' time, or however long it takes you to get there by just buying dividend stocks and holding through, when you get to $1 million, at best, you're going to be getting $3,000 a month income at today's value. Well, I thought I'd retired at 40. And believe me, when you retire, you spend twice as much money as you did before when you were working, because when you were working, you were too busy. Now, when you retire, you suddenly have all this free time on your hands and you spend. Admittedly, I had 4 kids in private school, which didn't help the calculation, but that's why I got into trading in the end. I think lots of you know the story. I was singing and playing guitar in a band. I'd gone back to my hippie roots and sold a business that was making very good money and coming up to 40. And I said, you know what? I don't want to do this anymore. And it was the best decision I ever made. And getting out of the UK 25 years ago and going to live somewhere warm, somewhere where people care about each other, and my kids grew up in a great place. So for me, that was the thing. But this is getting sillier and sillier. So now, if you follow along with the mantra of you just buy stocks and then you've got your $1 million, let's say, and you now think you're going to retire on $1 million. And $1 million, to be honest, nowadays is not as, when I was a kid, 50 years ago plus, a millionaire was a very rich person. Well, a millionaire now is not so rich because inflation has more than half the value of the money. So you're now in effect a half millionaire or whatever the accurate figure is. But hey ho, so you retire $1 million. Well, if you want to invest in the aristocrat stocks, and these are the ones that have year on year for 25 years paid out a dividend and also increased the dividend, I think is the definition for this. So that's okay. Well, you just bung it all in Franklin, put my teeth in, Franklin Resources, and you're going to pay your 6.3%. So 63,000 a year, you probably live on that. But putting all your eggs in one basket would be a bit risky. And just because the top now doesn't mean that that would be the case in the future. But if you start to go down here, once you get past the top 10, top 20, 3%, well, let's face it, guys, true rate of inflation, I would guess in America and UK is at least 5 or 6. And it's certainly accumulatively over the last 5 years, probably been 50, then this is peanuts. So then what happens when you've got to your golden age, having scrimped and saved throughout the periods of your life? I remember a pension guy trying to flog me a pension when I was 30. And I'd just been through a very difficult financial divorce, nearly lost the house and everything. So in fighting for custody of my kids from my first marriage, and just got myself back on my feet, started a business again, was starting to bring money in. And so 4 kids, this pension guy comes in and tells me I should have been putting away £1,500 a month 35 years ago. You didn't have 1,500 a month. I didn't have 1,500 a month spare. I got 4 kids and just got myself back on my feet. So, but that would have been the mantra. So that would have meant no foreign holidays, no extra expenditure, enjoying life when you're 30 and your kids are young and life's wonderful and you've got your best of health. No, we'll save it all up, and then when I'm 75, if I'm lucky, it might pay me an amount of money. So you get the message. It's not my thing, and I think it's getting worse and worse. And when you look in here, I mean, Procter and Gamble, massive company, and this is the kind of company that's supposed to do well even in a recession because people still need to buy the stuff that they make. It's paying you 2.4%. But then the other thing is the chap I was talking about the other day with his 200 grand portfolio. Yeah, well, I'm making, what's he making? 6 grand a year? But his portfolio's down 12 this week. And depending on how long it takes to recover, then that doesn't strike me. That would terrify me. But a lot of people still fall for it or believe in it and off they go. So just to show you the point, this is the S&P on a weekly chart, and this is going back to 2007, and actually this is 2000. So I was in here, dot-com boom, easy, like the crypto boom 2020. It was hard not to make money. I'm going to be a squillionaire. I will be retired at 30, I thought. And then it dropped, and it dropped significantly because most of it was hot air and nonsense, and there weren't that many people using the internet at the time, and it dropped by 50%. And I say, if you look at Amazon, I think it was 2003, Amazon dropped 95%. Terrifying. So then, battered and bruised and lost most of the profits I'd made on the easy phase, they're now not in a rush to get involved. But I did get involved in gold, as I mentioned many times before, and periodically I've invested in gold. And when you look at gold, you will see, oh, let's go through this a bit first. This is 2007, the really bad crash. So 2007, and the really bad crash this decade, there were worse in the 70s and 80s. But this crash, had you been coming up to retire at 2007 with $1 million that you just scrimped and saved for 40 years and done without your foreign holidays and reinvested your money like a good little girl or boy, it's now your $1 million is now worth 440. Thank you very much. But it wasn't our fault. It was everybody else's fault. But just keep investing. Believe me, at this point here, anybody who's just lost half the money is not in a rush to buy any stock ever again. And I've shown you this many times before. That's 2007, the peak, 2008, and it took the S&P until 2013 to get back. So even if you had just grin and bared it and just left it and said, okay, I can afford to leave it, you would have waited another 5 years to get back to your $1 million. And of course, the experts say to you, yeah, but if you kept cost averaging in down here, believe me, you just lost half your money you've saved up for the last 20, 30 years. You ain't in a rush to listen to any financial advisor. And ultimately, they get paid irrespective of whether or not they make you any money. Now, conversely, so remember this pattern and remember that. Conversely, at the same period of time, had you been in gold, so here is the gold drop. So gold dropped at the time 30%, so almost half what the S&P did. But more importantly, gold came back within 18 months. It was back to where it was. It then went on a parabolic run, and it went up to 1900 plus. And if you recall with the S&P was doing this. Then the S&P went on a great run and gold was terrible. And again, if you look on here, you can see that periodically we have had crashes along the way. And sorry, going back to this S&P one. So the S&P, we just had a look at the 2007, 2008. Oh, well, that was terrible. But, you know, generally markets all go up. So everything's la-di-da fine. Well, hang on a minute. It went down again here, 2018. We had a mini crash, and that was down only 12%. Then we had this was the proper one, 2018, 2019. So that was a bigger crash. That's down 20%. You're coming up to retirement. And again, what you ought to be doing, obviously, when you're coming up to retirement is to put your money into safer asset classes. And traditionally, financial advisors would tell you to put them into something like government bonds, which does make some sense. Not financial advice. I am not a financial advisor anywhere in the world. And then this was the COVID crash. So again, you've got all your money in here, you're coming up to retirement, or you might be 30 and you've saved yourselves $1 million and you think you're going to go wandering around the world and never have to work for corporate America or UK or wherever you live again. And hang on a minute, we're down again. End of the world, we remember, with COVID. And then it set off again, and that was great again. And then, oh, well, hang on a minute, in 2021, we had another drop. 2022, we had another drop. So the good news is that all of this can be avoided if you catch the right cycles at the right time. And this made me smile. This is from another news sheet that I buy. And this company, when the S&P is doing well, do really well. They buy blue chip stocks in America, dividend stocks. And the other key, of course, with the dividend stocks is you need to be investing in things that are going up in value as well as, because the dividend is not sufficient on its own. And suddenly I got an email the other day. So I'm on their mailing list because I want to listen to as many people's opinion as possible. And they sent a thing out saying, hey, well, one of the ways that you can deal with this is, I think this was after the Trump crash, you could invest in gold. Well, hang on a minute. Why the hell were they not talking about gold 3 years ago? Now, I was a financial advisor 35 years ago, for a 40 years ago, Christ, for a British bank, just to say I need a drink of my tea. And in those days, you actually they got you in on a 2-week course that you could go back on multiple choice and go change the answers. It wasn't really financial advisor. It was selling life insurance and selling endowments, but they bunged you in a bank as a financial advisor. And one of the things that this bank never did, and any part of the advice was to buy gold. And the reason is that in those days, I don't even think they had the ETFs particularly in those days, but a financial advisor would not make any money recommending clients go into gold. So as you know, those that have been with us for the last few years will know, I have been banging on about gold for a long time. In 2022, I was talking about financial crash ahead, which did come about. And we're talking about Goldman Sachs saying it could be a recession that year. So I have been investing very defensively for the last 4 or 5 years by having an element of gold and silver, sometimes more than others. And I've also shown you how getting involved in miners. But I started buying gold and silver and shared it with you here. I started buying it, I think, in the February of 2022, when gold was at $1,700-$1,800 an ounce. And I explained then that what the thinking was. It's the ultimate safe haven if we do go into recession. I also talked about silver. I also showed you this. If you've not watched this before, you should all watch this. Hidden Secrets of Money episode. I think there's about 8 episodes. Mike Maloney, very well made presentation. And it's on YouTube and it's free. And he explains, going back to the Egyptian period, how gold has been the ultimate safe haven. The one thing to note, he is a gold bullion dealer, now retired. He started goldsilver.com in the US. So he's generally always bullish on gold. And as I've just shown you, there are long periods of time when gold, I do not believe, is a very good investment. But that is certainly, you should watch that to understand the difference between money and currency and the fiat paper nonsense we live on now. Again, in 2022, I was saying, if you don't learn how the world works, you're going to get screwed. And again, I talked about it again. So this was when we had the collapse of Silicon Valley Bank. So I've just shown you there have been probably in the last 10 years, 20 years, there's been 10 periods when the S&P's been down significantly. Then we had another crisis with the collapse of this bank. And the government basically bailed them all out, did Biden's lot. And they exceeded the 250,000 limit because they reckon there were a lot of big Silicon Valley firms who had significant amount of money in this bank. So again, this is a recurring theme that I have shared with you all along. July 23 about getting back into Bitcoin. So I started, I told you then I was getting back into Bitcoin when it was around 28, 29. And then here, this is the recurring thing I keep talking about all the time. I just shown you how when the S&P crashed, it took 5 years to recover. By being in gold at that same period of time, you would have tripled your money. Then when gold peaked and the S&P started to kick up again, then would be the time to then move into stocks. And stocks then had the great run. And then periodically, as I've just shown you, when we'd had a crash, gold tends to recover faster and tends to go down less. So in this post yesterday on Monday, I explained what we're going to do and how I'd been telling you for years how I was buying gold and silver. I actually bought some more last week. I bought some at 30.25 and again at 31.30. And I bought some for my daughter's account at 29 something as well as, because nothing has changed in this respect for me. And there is talk that people are having to sell their gold to pay off margin calls on stocks, which is possible. But for me, longer term, I said in 2022, I think it was, that I expected it to go to 3,000. We were at 3,300, was it, the other week? And silver was up at $34 again the other day. So for me, it's 30% of my portfolio. As a result of which, the crash in the stock market, for me, has been offset by the gold and silver that I hold. I was parity the other day. I hadn't lost a penny because gold was high and the stocks were down. It has changed slightly in the last few days. I think I'm 3% down perhaps, but one is balancing the other. So again, for me, you don't want to go with the mantra of just put your money in stocks and diversify your portfolio within the stock market, because when it comes down, it all comes down. So you need to think out of the box and think differently. And again, I'm going to show you that in a moment. So this was talking in November of 2024. We made a fortune in 2024 in my other group. We had cryptos in our portfolio that were up 6,000% from the ones we bought in 2020 that we'd kept. But even then with crypto, I was showing you how, using the trading background, as the price of an asset doubled or trebled, I took the stake out. I took some profit out and I shared that along the way as well as. Now at the moment, crypto is down. There are a few of the crypto I actually will look to buy this week, and was going to buy some yesterday and got too busy. But buying anything at the minute is extremely high risk, but that's the nature of the beast that we're in at the moment. And again, going through my investing site, my investing section within Forex Mentor Pro, these are all the most recent posts about Trump and market chaos and what's going to come. Is there going to be a crash? And Tesla, I was explaining it, the sales of Tesla anecdotally before the first quarter report came out. Anecdotally, from the UK and from Europe, the sales of Tesla are way down compared to BYD. And I don't know if you saw it the other day, there was a picture in the press of BYD's factory in China. They're making electric cars in China, and this factory complex is bigger than San Francisco. It's huge. And the other advantage that the Chinese have got is they've got all the components there. So unlike Tesla, who are having to buy cobalt, I think, from South Africa, and various ingredients for parts within their cars from around the world, which will be getting hammered by these tariffs, they have everything in situ. And Ashley says they've also found a new fast charging battery. And I saw a taxi firm in China where what they do is they've set up that if your battery is running low, you drive in, and it's like driving into a car wash, it looks like, but you open the bonnet of the car, they lift out your battery and they put another one in and you drive off. So they appear to be streets ahead, no pun intended, with driverless cars as well. And I think Wuhan has got 400 of them already out in situ and working. So for me, Tesla, there were clues that Tesla was going to drop. And for Tesla, for me, Elon Musk needs to come up with something robotics wise or something stunning to rekindle the interest. Apparently, there's a survey in Germany the other week that 92% of people will not buy a Tesla. I think JD Vance upset the Germans a lot and the Europeans by telling them that they were killing freedom of speech, which they are, and they didn't like it up them. But anyway, that was the thing. So that made sense to me with Tesla. And then talking about Forex and everything else, say we trade repeatable patterns all the time. And because we are in yet another extraordinary period of time, what I was saying yesterday, be careful, because price is just cutting like a knife through lots of levels. And yet, in a way, it's not. And I'm going to show you that in the session as well. So this is a copy of some of the Telegram message I sent out to my investing group. And I was talking about what I thought was coming next and what I was buying, and bought a bit of various things. Gold update and the next big cycle. So I shared this with you the other week. This is a crazy, exciting new strategy. Right, before we go any further, I must take a drink because I'm getting a sore throat. Hang on. I was talking about this the other week, and I bought some of these. These are high yield ETFs. Sounds crazy. I have followed it for a year, and I have explained it in detail for those of you who are members of Your Investing Future, the thinking behind it, the reasoning. But these are a high yield, high dividend paying ETFs. For example, the Tesla one is paying 78%, and they pay you weekly in different groups. And so here you've got Apple at 35%, you've got Nvidia at 76%. These fluctuate and move around all the time, and they are not buying the underlying stock. They are taking out options, synthetic options on the prices. And so far, I have spent, as of today, I believe, $8,000. So this is my Tasty Trade account. I've had to record this a little bit earlier, but you can see the numbers are moving in real time here. So it's not photoshopped. I couldn't share all of it with you because I can't cover the account number up whilst I'm in this meeting. I've spent $8,000 so far of the 10 that I have allocated for this. And so buying at a very risky time, you think, well, crying out loud, this should have been hammered. And in actual fact, out of the 9,000 I've spent so far, I am in profit. And today is the 8th of April, when everybody else has got hammered. My profit yesterday alone was this amount. Anybody, any idea how I managed to be in profit with this at the moment in view of what's going on in the market? Suzanne says, UK only has YMAG, none of the others yet. I shared a link in the group the other day that there's supposed to be a European version now. Again, the UK, we won't let you risk your money in this, and we won't let you risk your money in that, because they can't make any money out of it. Not exactly shorting. I get confused with the terminology. I explained recently, I'm learning options at the moment, and it's something I've wanted to understand better for years. And I bought a put. I think options trader Brad can confirm whether I've done that right. Basically, I have the right, but not the obligation to sell the NASDAQ at fairly higher level. So basically, whilst my stocks are going down a bit, on the other hand, the option is going up. So the option is an insurance policy. And so far, I started on the 10th of March, and initially I put in 5,500. And as of today, I think I've had $250 of interest. So unlike the guy with 200,000 who's getting $500 a month from his portfolio, thus far, my first 5,000 that I've spent has generated 250. And if that doesn't blow the pants off you, I don't know what will. Now, I've only just started this recently. I have followed this for a year, and I explained my reasons in Your Investing Future here, saying, look, it sounds too good to be true, but I don't ever share anything with people, or even I never recommend, because I'm not licensed to recommend, but I never share anything with anybody unless I put real money in it. So my wife and I said, okay, we'll give it a go. We'll put 10 grand in and we'll see how it goes. And we've bought what we think is a balanced portfolio, and we have tried to buy them so they're paying out, different ones are paying out on different weeks. So we have money coming every week. And we've also done it that we've shared it across different asset classes. And Tesla is the only, all of the ones that I bought, I put in roughly $500. And Tesla, I only put initially 200 in. And there's a short version of Tesla. I think it's called CRSH. And I bought Tesla short. But the rest of them, I bought a group of them, and I've added a little bit as well. So the point is, if you think outside of the box and start to learn that, not just listening to put your money in the S&P. I mean, the other thing is, within this site, we have various courses, and one of the courses is to do with, and again, I've shared this in Mentor Pro before, understand what's going on here. What's going on down here now is fear, terror. Eek, it's the end of the world, and then people will start to buy again, and then Joe Public generally starts to buy in around here just as it's at its peak, and it drops again because they don't understand the psychology. And I asked the question a few months ago, why was Warren Buffett sat on 350 billion in cash? The press kept mentioning it, but if you haven't the sense to realize that one of the richest, smartest blokes in the world is sat on 350 billion in cash, because he was expecting this. And then again, for me now, because I had, I think 30% of our portfolio in cash, I have been buying in the last few days. I've not been going mad, but I have been buying. Why? Because it was the plan. The plan was, for example, if Amazon was way too expensive 6 weeks ago and now it's dropped down significantly, well, hey, the sales are on. Could it drop further? Yes. And so when I do this, I buy in phases. So I've explained the other week, if I was going to buy, let's say, $1,000 worth of Amazon, I bought $500 yesterday, let's say. And then I've got levels lower down. If it drops further, I'll buy another $250. And if it drops even further, I'll buy another $250. And I don't use stops. But my portfolio is hedged by gold. Now I'm starting to use options to hedge as well as, so it doesn't matter to me whether it's going up or down. And that is why you need to start to educate yourself more, to think and realize how this all works. All this toing and froing and all this chaos, etc., etc. I've just shown you it happens all the time. And the glass is half full syndrome is, you could say, well, at the moment, this crash in the S&P and it's the end of the world. Well, it's where we were at the start of last year. So, hey, it's nothing, is it? In the scheme of things, it's nothing. But as ever, you only risk money you can afford to lose, and you be careful what you buy, etc., etc., etc. So in here, courses. So did this, just for members, if you go in, I've updated my goal for 2025. My original goal was, I made a lot of money out of crypto. I made decent money out of mining stocks, and I made good money from gold. My original idea in 2020 was, okay, I could retire this year fully. My wife won't let me, and it'd drive me nuts if I stopped doing stuff. But that was the plan. And then I could go do what everybody else is. I could convert the money that I've made, not by saving for the last 30 years, but the money I've made in the last 3 or 4 years. I could buy $1 million or more of stocks and just live off the dividend. Clearly, I can't. So here, I've revised my goal. I am looking at other ways to make income and not all dependent on the stock market, as I've shown you. There's a course for cryptocurrencies, and then this is the new one. So this is high yield income stocks. And I explained in here, I'd been looking at this for a year. I think I'd done the partial post of this in Mentor Pro. Partly why I got interested and I bought this the other week is because they have suddenly dropped significantly. And so one of the guys that's pitching this was on a YouTube video, Scott Welsh. If you Google him, you find him. He's just buy them. I don't care if it goes down because I'm just making so much money on the dividend every month. It doesn't matter. Well, I don't really like that idea. So for me, I have watched it for a year, but then of late, let me put one of these up. I don't think I've got one on here. Let's look at Tesla. Not the one I would buy at the moment for sure in any quantity, but Tesla. So when it launched, its peak was at $11, and then its peak in December was at $14. Well, hey, I bought the other week. I bought 2 lots. I bought $100, I think $200 first. It's in the site, $7.60, and I bought $8.07. I'm not in a rush to buy any more Tesla because I think Tesla's got some serious problems to come. So the potential upside for me on Tesla is not great, but I have got the potential upside when you look at some of the other ETFs that they've got. This is 80% higher. So I have the potential to make the dividend income from this, and I have the possibility for some growth. And so let me show you a different one. Let me look at Amazon, let's see. Right. So Amazon, I've actually bought a bit more of this yesterday. I bought some stock and I bought some more in here. So I need to update the records. I think it was in here. So I bought the first bit in here, second bit here, second bit here. When I bought them, the dividend was 33%. It does fluctuate. And so if I look in now, let's say I probably cost averaged in somewhere around here, it has the potential of 21% growth, which is not massive, but this is one of the biggest companies. Some of the other ones, like the Tesla one, have got the potential to make 70, 80%. So think differently. Think out of the box. Don't fall for the BS. Now you've got the hedge funds coming out saying there's going to be a recession. Why do you think the hedge funds are now talking it down? Why are they saying, oh, this is going to be terrible, this is going to be bad, bad, bad? Who are they trying to scare? No, I didn't buy a call, Oliver, because that is, yeah, it was buying a put. Yeah, not a call. If you buy a call, obviously it has to go up, otherwise you lose. And you be mega, mega careful with options. I say, I'm just taking baby steps with this. And in the end, I've hired a guy who's a specialist in it to mentor me. Somebody thought that was quite amusing last week. But look, I don't understand it enough. I've never had the time to do it properly. Always felt that I ought to do. And hey, I don't know it. I'm paying somebody to teach me how to do it. So I will share that with you along the journey. Yes, Dan says retail investors, the likes of Goldman Sachs and Jamie Dimon and all the rest of them, are now saying this could get really, really bad. This could be the end of the world financially as we know it. Why? Because they, along with Warren Buffett and all the rest of them, want to scare you into selling so they can buy it cheaper. And they still get paid, remember, their fees, even as it's going down and you're losing money. There's questions we've had on here. Puts on indices. The price of that ETF is dropping sharply. Which ETF is dropping sharply, Adler? Oh, the Tesla one. Yeah, it doesn't matter. This is, say, if you go back to the Scott Welch thing, it doesn't matter if it's dropping because it's paying you a dividend every month. And what they're doing is synthetic covered calls. So if it goes up or down, it generates income. It's better if it's going up, but because they're then selling puts, I think it is, or covered calls, it doesn't matter in effect if it's going up or down. You're still getting the dividend. Go on, can you say who it is? Okay. No, he doesn't want me to say. He asked me not to, so I can't say who it is at the moment. But I'm hoping that he will come along and share some of his experience with us once I have learned more. He's semi-retired and doesn't want to do it, but I persuaded him because he owed me a big favour, and I'm paying him a lot. Puts on indices. Right. So I hope that has helped today. Think differently. Think out of the box. Somebody asked me about where I buy gold. I buy gold through Bullion Vault in the UK. They are, I think they're FCA regulated. They're certainly members of the gold board for 100 years. And basically, I buy it in dollars in Switzerland. I don't want it in the UK because although I've cut most of my financial ties to the UK, I don't want it in the UK. So it's stored in a vault. It never leaves, never seen it. It's allocated to you, and you can go in and you can buy $100 worth. And as you'll see, I think it's my daughter's account. She's fully allocated now, so she only got $700 left of cash. You pay a small monthly fee for storage and insurance, and they go around and check it's there every day, but it's allocated to you as well. So if they ever go bust, the taxman, that man cannot go in and seize the assets first. It is your asset. Okay, I hope that has helped. I hope it's at the very least sparked some interest and make you realize that what's going on at the moment is normal in stock markets. But if you want to be cannon fodder for the big boys and for Wall Street, just keep doing what you're doing and accumulate those dividend stocks. And when you get to your $1 million, you might get 500 a month. No, 3. Dan says, is this more complicated than FX to learn, get your head around? Options, I find, is. But if you're talking about this yield max thing, well, no, that's not as complicated. I think you can paper trade in tasty trades. Yeah, I'm pretty sure you can in tasty trades. Yeah. The UK and Europeans, tasty trade are not allowed to let you buy these high yield stocks because some UK and EU regulation, but they did put a notice out on their site the other week. Just to say, I need to move this in case it opens my account, but they did put a link on saying if you're in Eurozone that you could open an account with them. There is a way of doing it in Europe. No, it's not coming up. For some reason, if you're in Portugal, you are allowed. If you're in the UK, and I think France and possibly Spain, you're not, but you'll have to check. But it's certainly an interesting idea, and there are more companies than YieldMax do it. I have bought a few other bits and pieces as well, and I've been looking at some of these. So all very interesting, and possibly, certainly, as I said in this blog post in here in the Investing Future group, suddenly you could create a retirement income. And possibly what I'm thinking of doing is trying to get 10 grand to 100 grand in 5 years. But at my age, I don't want to wait that long. So if it does work out and I start after 6 months seeing that I've got substantial dividend coming in, I probably would allocate a bit more to it, maybe another 10. Righty ho, we go over to Ashley. I've left him 1/4 of an hour.